So let's just jump into it. In terms of the agenda for today, I want to start with the two ways you can start doing the equity research. Both are interesting. I didn't know about the two ways of doing it until earlier this year. One of them's kind of the way we're going to do it most of the time at ML Capital, but there are two ways. The other is the first step, which is company research, second step, industry research, and then finally your financial analysis to see if you actually want to invest in the company or if it's a good play. So let's just get her started here. Here are the two methods. I call one the top down, which is like the correct way to go about this. And then we also have the ooh method when someone tells you about the stock and you go through it that way. So in terms of the top down method, we like to think about it like we're picking an industry to start. And that way we can pick the best thing in that industry and then invest in it. So we're going to pick an industry, research that industry. If the industry has potential, we keep looking and we look at the companies inside that industry. And that's the difference between the two methods. Then everything else is the same, but it's just in different orders. So you're going to run a comps analysis against the different companies in that industry. You're going to pick a potential company in that industry, and then you're going to dive deep into the company's financials. And when you do so, you're going to decide whether or not you want to invest in it. Now, the OO method's a little bit different because in this method, you're hearing about a company and that's how you're diving in. You're not going from the industry first. You hear about a company, boom. Now you're researching a company to understand exactly what they do, right? And once you fully understand what they're doing, then you're going to research the industry. Now, if you research the industry and if the industry looks good, now you're going to review the company's financials and can pair it with a comps analysis or a DCF. Usually, we go with the OO method because that's just how you hear about stocks. You don't usually go top down, although top down probably is a more sustainable way of picking companies in general. But I'm gonna just go through the OO method because that's how I go through stocks. All right. So for examples today, we're gonna be using Chipotle. Really interesting company. I didn't know a lot about it till I actually made this slideshow to explain to you guys how to do this. Very interesting. It has no long-term debt. Like that's pretty crazy for a company like this. So let's dive deep into Chipotle. All right. So we've heard about Chipotle. We're interested in it. Now we have to understand what the company does, what the company is. Okay. And usually you can find this information in a company's 10K reports, which are very easy to find. What you do, you literally just search up the company annual reports. If they're a public company, they have to have these public, right? Chipotle, most companies actually have like a dedicated part of their website that are going to show these annual reports. So, for example, this took me 2 seconds, right? Wrote that into Google. Boom. Chipotle's first link is on their annual reports. And then this is what is going to be, they're going to basically be like a PDF with, I don't know, 20 to 40 pages. But for the first step, you don't need to dive fully into it. And a lot of it is kind of junk that doesn't really matter. We're just worried about the business, okay? Which is this little item here. Find out what page it's on, read it, and read every single bit of it. It has a ton of information on what the company does, and it's kind of broken up into the most important parts of said company. Let me just quickly show you what that's going to look like for Chipotle. So here are their 10Ks that I've downloaded. If I just open up one of these. Jack, you can still see this, right?
Yes, we can.
Yes, we can.
Okay, cool. Whoa. We need to put this into page down mode or to continuous scroll, please. Thank you. Okay, cool. Let me quickly find here where this is a compensation, commodity prices, opinion on financials. I might have passed it. Boom. Okay, cool. Right here, we get a glimpse at their general business. Chipotle Mexican Grill, Delaware Corporation, important. Business strategy, important. All these things are going to help us when we have to fully understand, right, what this company is doing before we want to do anything with them. So they have a bunch of other stuff, quarterly, what they're doing, unresolved. This is interesting. I keep seeing these ones on all of the 10Ks, and it always says none. But It'd be interesting to see one where there are unresolved staff comments about the business, but I digress. Basically, you're going to be able to find out a lot about the company through their 10K, right? And once you're done that, you can dive even more in depth just by going on Google and figuring out what their company does. But you want to know business strategy, growth opportunities that they're looking into for the company, where certain parts of the business are really excelling compared to others, and what's driving their money. Cool. At this point in the research, we have to make a decision. And this is kind of like a basic yes or no decision throughout the whole research process. Stop immediately if it's not attractive anymore. If this is not an attractive project, be done with it. Don't keep researching it. It's a waste of time. If you've done the company research and you're like, I'm not interested in this company, I don't think this has potential growth, drop it, get onto a new company. It's not, there's no point in sticking along with it. But if it's still attractive, we keep going. And this brings me to industry research. Now, this is a little bit of an interesting way of doing the industry research. I don't know if you guys know what an NAICS code is. Basically, it's the North American Industry Classification System code that any business is given, which puts it in an industry, right? So Chipotle registers as a corporation, boom, immediately there's an industry classification along with it, and it's as simple as searching up the business name and their NAICS code, and there'll be different websites that show what codes they go with. And sometimes a business will have more than one NAICS code, so you'll have to do research in both industries, which is probably, this is going to be the longest part of your research, is understanding the industry that they're in. But basically, once you have that code, now you're ready to go to IBIS World or just searching up industry reports on that code. I use IBIS World because the University of Toronto gives us these accounts for free. I don't know if your school does. I'm sure there'll be something like it. If not, also, you can just find industry reports on Google using that NAICS code. But for the purpose of this video, I'm just going to show you how to do it on this. This is the interface. You literally just plug in that code, and it immediately will come up with industry reports on that industry and relevant industries next to it. You download them and you read them. You read them. Probably like 20, 30 pages. They're concise. There's a lot of data visualization in them, so you can actually just see instead of having to read a lot of the time. You really want to understand the industry because that's what's going to be driving the company. Cool. These are some of the things that you're going to find in that breakdown. Cool thing about, these are some interesting things I took away from the Chipotle. Look at this right here, where they are high risk, high reward. So they're super high volatility, but pretty high revenue growth. So IBIS World is classifying them as a roller coaster. This could be a risky stock, but there could be high upside on it as well. Some of the external drivers for the business, interesting. Consumer spending, obviously. Confidence. Healthy eating, not good. Which makes sense, right? If people are worried about healthy eating, maybe that's going to impact them negatively because Chipotle isn't the healthiest. I don't know. We'd have to actually do the research on the company to fully understand this. Households earning a lot of money. Cool. Life cycle. This is going to show you where the industry is in its life cycle. So for, I guess, fast food restaurants or dine-in restaurants, it's at its maturity stage, which means there isn't too much upside in terms of industry growth. But, these things are also subjective. IBIS World can be wrong. It's more up to you looking at this data and, using your intuition to see what you think is going to happen. And classic SWOTs, 4 or 5 forces, all the good stuff. Once again, let's make a decision. Yes or no? And we got to make a decision every time. We don't want to waste more time because the next part is actually going to be pretty time consuming. And if you already don't want or you're not interested in the company, get out, dude. Get out. It's too much effort and time to waste. So let's say we're still interested in the company after doing industry research. We go down the green path. Now it's time for the financial analysis. I talked to a few of you guys that I interviewed today and yesterday. So I hear that UBC has Bloomberg terminal, very similar to FactSet. So we use FactSet at UFT to download company metrics and financials. You guys are using Bloomberg. Essentially the same thing. Learn how to use Bloomberg. It's going to be your key to success. Basically, you're going to be able to download the information in a much more efficient way. But what we want is preferably quarterly information for the past 25 quarters. That's what we want. You can use less. I like 25 quarters. It really shows a good example of what's happening in the company. And quarterly is a little bit more important because it shows you cyclical trends instead of an annual or a fiscal breakdown, because you're only seeing it on the year. You don't see trends throughout the year. We want a ratio analysis, which I'll show you what that is, a balance sheet, income statement, use of cash, and comps compared to different companies that are considered competitors of that company. And I'm going to show you what we do with all that information. Another thing, organization. Let's keep very organized when we're doing this stuff, because this is a lot of files. We've already downloaded 3, which, by the way, we want the 3 past 10Ks of the company. So we have 3 big PDFs. We now have 5 or 6 Excel files downloaded from Bloomberg or FactSet. And we also have 2 or 3 industry reports downloaded from IBIS World. We're looking at, around 10 files. We don't want them randomly spread out throughout your computer. Throw them in folders, name your folders, keep your folders in good spots so you can quickly access them. All right, now when you do the financial report, that's done for the slides, and I want to show you what we do here. So I've already put those 5 files from FactSet into an Excel file. They're going to download as separate Excel files. You can just drag them like this, grab them, and throw them into another file. You want them all in the same spot just so you have ease of access. So here's what the ratio analysis is going to look like. All right. Like I said, we're using quarterly information, 25 periods, last 12 months. So this LTM here, that's setting for last 12 months. So what it's doing is it's taking your ratio from September 2023, 12 months back. And it's doing that for each one. So it's not an actual quarter representation. It's 12 months at each point, if that makes sense. A little bit confusing to understand. You'll get the hang of it once you start doing it. Some of the key things we want to look here, gross margins, operating margins. Thought operating margins were pretty interesting with this company, with Chipotle. And what you want to do here, I'll kind of show you. Let's say we want to graph this out. Okay, we'll grab that. We'll come down here, we'll throw this, boom. And then we will grab this row that we want. Or no, we want to see operating margins visualized. Okay, cool. We're going to throw that in here, and let's insert a recommended chart, and let's see our operating margins. Okay, cool, interesting. Now we have an easy way to visualize what's going on with Chipotle. And as you can see here, we're starting down here around 6%, 6% operating margins, slowly climbing up, and then here in 2020, it dips. Does anyone know why? Anyone have a guess?
COVID-19.
COVID times. Stores aren't open. How are they going to be making money? Their margins are going to drop. And apparently, since COVID, Chipotle has been flying in terms of getting their operating margins up. I have no idea how they're at 16% in a restaurant business. So these are interesting things that we want to figure out using their 10Ks. How are they doing this? Are they going to continue to do this? Because if they are, we want in. We want in. Okay, cool. So that's their profitability ratios. We can look at their valuations. These are very important ratios. Basically, these are determining what the market views as the company's potential upside, and it's basing that, or it's averaging it out to their EBITDA, which is important because now you can compare it with other companies' EV over EBITDA because it's anchored on the same metric. So now it's actually comparable. So I can show you right here. Chipotle has a $59 billion market cap. You can't compare this company to Texas Roadhouse, who has a $7 billion market cap, unless you anchor it. But once it's anchored, you can compare the two. And I think right here it's saying, yeah, Chipotle's at a 31x EV over EBITDA. Texas Roadhouse, 14. So what this is saying is the market thinks Chipotle has way higher growth potential than Texas Roadhouse. Do with this information what you will, because you're kind of going to have to make the decision here. Well, if you were interested in Texas Roadhouse and you think that there's a huge upside that the market doesn't know, this might be a great entry point for you because the market doesn't believe that it's going to go up as much as they do Chipotle or other companies in this industry, right? Like the average is 27, so Chipotle is considered an industry growth leader in terms of restaurants and bars compared to these other ones. So that's interesting. Keep an eye on these two stats here for sure. Operating efficiency, inventory turnover is a pretty crucial one. This is just telling you how long you're having inventory on hand. You don't want inventory on hand long. Lower the better. It's literally cash. It's tied up cash. You want cash. You don't want inventory, but big companies are gonna have it. So you just want to make sure that that's stable or it's coming down. That's important. Cool. That's kind of some of the stuff I had here for the ratio analysis. If we look at our use of cash, this is all important. What is a company valued on? It's based on the present value of all their future cash flows. So what's important? Cash flows. Cash flows is like the number one important thing here when running a company that's publicly traded. Here I can see this is some interesting cash flows here from Chipotle. They seem to dip, come back up. They're having weird, like, some quarters they're having great cash flows, some they're not, some they're having negative. It looks like they've been killing it though since 2022 compared to any previous years, but we'd have to do some more analysis on that. CapEx, this is another interesting area. Are they putting money into stuff? It looks like, yeah, they are investing more now than they were. Maybe that means they have projects going on that are interesting. Debt issuance. Look at this. This is very strange to see a company with a $60 billion market cap. Zero. Great for us. That takes out a huge amount of risk that there's no debt. I'd like to see why. Zero dividends paid. That's not a bad thing. That's good. They have opportunity to put money into stuff that they can actually grow higher in than paying out dividends. That could be interesting for us as investors. And cash on the balance sheet, it seems to be steadily bumping up, which is a great thing to see as well. Balance sheet, this is some stuff you want to know. Retained earnings is important. Cash and cash equivalents. You'd want to go through this if you're actually doing a company analysis, but for the sake of time, I'll just skip through there. Income, you want to make sure revenue is steadily increasing. Right now, I can see that it's... Oh yeah, revenue is booming. Let me just make a graph of that quickly. If I throw that to a recommended, what the? Okay, that's glitched out. Don't worry about that. But yeah, that's looking good. Cool. That's kind of all I need to talk about here on the income statement, and then comps. All right, you want to download the comps and you want to see where your competing brands are stacked up against yours. And in this case, I'd probably be looking at Yum Brands, which is Taco Bell. I'd have to look into what Darden... I really can't believe that Chipotle's worth $60 billion and Domino Pizza is only worth $13 billion. That's very interesting to me. Like, does anyone here eat Chipotle? Maybe it's gotta be just a huge in America. That's crazy. But basically what you're going to want to do here is once you've picked 3 companies maybe that are very close to the business that your company runs, you're going to download their ratio analysis, and then you're going to compare their stuff to each other, graph it out. So there should be like 4 lines, and it'll tell you what company's what. And then you're just going to be able to come up with an analysis based on its company competitors. And at this point in the presentation, I just want to say this is where you choose, I think this is a worthwhile company or not worthwhile company. And on top of that, it might be important at this point also to do a DCF, but that's at your choice. And yeah, guys, hopefully this has been a helpful lesson or tutorial on how to the basics of doing some equity research. If there's any questions, feel free to ask me. If not, thanks for watching, guys.
Jack, that was great. We really enjoyed watching this video. So I'm just wondering to ask, this analysis is for people like us to invest into these companies, right? Because I've
Yeah.
already said that I'm actually new into this industry. I'm just have to make sure that this is for checking that we're investing, or we need to find people like investors who have money and they don't know how to invest their money. We just suggest them to invest into these companies.
Yes. So our goal would be, okay, as a capital management firm, our goal would be to prove that we have a track record of earning or beating the market in a very low risk environment. And then we'd be trying to get customer funds and we would be investing their money. So that would be the goal of a capital management. Yeah.
Yeah.
So that would be
I got it. That's great.
perfect. Yeah, that would be the goal. But you can use this knowledge to invest yourself, right? So for us, because we're doing this and we're interested in finance, this is stuff that you should be doing by yourself when you invest your money, etc. Right?
Jack, I just got one question for you. On FactSet, would you be able to show us where we can download the comps, the income statement?
Yeah.
Fantastic.
Here, let me share. Let me reshare my screen. Okay. Can you see this all right?
Yes.
Yes.
Cool. Okay, so this is what FactSet's gonna look like. Bloomberg will have a similar option, but I don't personally use Bloomberg, so I don't fully know. I do have a certificate in Bloomberg, so I should know. It probably wouldn't take me too long to figure it out. It's probably very similar. But what you do is you'd go to the company security, type in their ticker. So for example, Chipotle is CMG. I'd go to, let's just go to the ratio analysis. All right, wait for this to load. For here, I'd want fiscal quarters, LTM, so the last 12 months. Boom, plug that in. I'm gonna want 25 periods for myself for this. This one right here, this flips it. So right now it's going in order from 2017 all the way to now. It's usually set like this. This is so annoying to deal with once it's in Excel. So you want to flip this around. And now when you graph it, it's in, the right order, date and time wise. And then you just click this little button up here to download it. Does that answer that question?
Yeah, that's fantastic.
Yeah, that's fantastic. Thank you.
Perfect. And you do that for all, it's all the same. So all of these are the exact same as that. Make sure these are all in order and then download that up at the top right.